This conference will now be recorded.
We're continuing in our study of managerial accounting, and the key part of managerial accounting is that the information is for internal use, and it focuses on future emphasis rather than financial accounting, which is a historical perspective. We begin with job order costing. And in job order costing, we have a managerial accounting cycle, where we begin with determining the unit product cost and selling price. And we spend a week on that because you have to have this correct. Then we journalize entries, post them to the ledger. Then we prepare the trial balance. Then we prepare our financial statements: cost of goods manufactured, cost of goods sold, income statement, statement of retained earnings, balance sheet, statement of cash flow, and we prepare closing entries. And we said in any product, there are three costs: direct materials, labor, and manufacturing overhead. And we need to get this on a unit cost basis. We have period costs that come in stage 5, but those are not product costs. And I gave you an elaborate set of worksheets so that you should be able to determine, if you got a product, what is its cost on a unit basis for materials, labor, and overhead, total unit cost, and then the selling price. And of course, we need the predetermined overhead rate. So that's stage 1 in the process. And now we're on stage 2, which is making the managerial accounting journal entries. And I put this in a stage perspective to look at the flow of product and cost. So let's see if we can. So if you look at this Excel spreadsheet, and when we have a product, we go from stage 1, buying the raw materials, to stage 2, transferring the raw materials to production, and also adding the labor and the estimated overhead. Stage 3, once the item is completed, we transfer it to finished goods. And stage 4, we sell the finished good. So what I've asked you to do is to look at this in terms of stages, in the life cycle of the product, where we start off by buying the raw materials, and our journal entries, we debit raw materials and credit accounts payable for every raw material that's involved. Once we have the raw materials, we can then transfer them to work in process, hire the laborers, they make the product, we estimate the overhead. We come up with a total cost and a unit cost, and we transfer these items to finished goods. And this is that journal entry. Then when we sell the goods, this is our traditional inventory entries, where we debit cash account, credit account receivable, and credit sales. We debit cost of goods sold and credit finished goods. And then we talk about the fact that on manufacturing overhead, we estimate it, but at the end of the year, when we get ready to do the financials, if we, as in this situation, we didn't estimate enough, we estimated it at $290 and it was $300, then we got to pick up that other $10,000 in costs by debiting cost of goods sold and crediting manufacturing overhead. On the other hand, if we estimated it too high, then we debit manufacturing overhead and credit cost of goods sold. The bottom line, the manufacturing overhead T account needs a zero balance. It needs a zero balance after this journal entry is made. So let's go back. So that was just the Excel's flow chart to look at stage 1, acquisition of raw materials, stage 2, transfer the cost to the work in process account, stage 3, stage 4, stage 5, and there are journal entries in each of these stages. So notice in the acquisition of raw materials, repeating, we debit raw materials and credit accounts payable. And for the financial statement, Joanna, the T account that we create becomes the information for the top of cost of goods manufactured statement. So there's going to be a T account created. Then when we get into the work in process account, we transfer in materials, labor, overhead. Once again, here's examples of these journal entries. You'd have as many of the raw material journal entries as raw materials you were using. Only one for direct labor and one to estimate the overhead. When we post these to the T account for work in process, when we post this, this becomes the information for the remainder of the cost of goods manufactured statement. Then when we transfer to completed, the finished goods to completed inventory, to finished goods inventory. So we're transferring from work in process to finished goods. And this is the key journal entry. How do we come up with how much we're going to transfer when everything is not completed? The T account that relates to this stage is the cost of goods sold. So T account for cost of goods sold comes the financial statement for cost of goods sold, just looks inside the T account for cost of goods sold. And finally, we have the sale of the finished goods and the transfer of costs from finished goods to cost of goods sold. So these are typical inventory entries, except for the one related to putting in the actual overhead as opposed to what we estimated. And here's some more examples of how we do that. Stage 5, payment of selling administrative expenses plus dividends. That's just the financial accounting that, and so we've layered those first 4 stages on top of stage 5. Here your chart of accounts. You know, you got new accounts for raw materials, work in process, and finished goods inventory, cost of goods sold, and manufacturing overhead. The material here shows you how to prepare a cost of goods sold. So and you have a homework problem. We give you the facts, we give you all the account balances. So we give you everything that happened. Then we put up the T account. Okay, so you see this, Joanna, here's the T account for inventory, here's the T account for work in process. And this, from this information, the cost of goods sold statement flows out. And we'll come back to this. Then your cost of goods sold statement flows out. That's going to flow out from the cost of goods sold. T account income statement, just the traditional sales, that's cost of goods sold, gross margin, less selling administrative expenses, net income. That brings us to our in-class example. our in-class example. We have a simple example where we're making a product, ink, 2 ink cartridges at $10 each. Direct labor, 3 hours per book. Manufacturing overhead, the costs come out to be $600,000. So depreciation and all of these costs are in here. The quantity to be produced is 50,000. So when we looked at this, we said that, okay, ink 2 at 20, 2 at 10, 20, labor 3 at 12, 36, manufacturing overhead, we got total overhead of 600,000. We making 50,000 units. So we can shortcut it when we got one product. 600,000 divided by 50,000 equals 12. So our total cost is 58. Selling price, that multiple is 3. So 3 times 58 is 204. In your calculations, you told me that the POR was 4. So we kind of done your work for you on this part of it, Cheryl. Any questions?
My only question would be, can you upload templates of all the documents that we need to complete this kind of assignment? Because it was hard for a lot of us to do our work without the templates.
What templates?
Like, for example, I had the cost of good manufacturing statement. So I had to make a template for that, make a template for the T accounts, make a template for everything.
Did everybody have to do that?
Yep. It's supposed to be 58, not 58.
What?
68.
I had 68.
You said this is 68.
You meant to put 6, so it's just a little 5 right there.
I had 68 204.
So this supposed to be Terrell got it wrong then. 68, you say?
Yeah.
Man, that wasn't nothing but a typo.
Is the selling price 204? Check your course.
Yeah, it's still everything else right.
It was just a typo. Boy, I type on a Mac, so the
So
5
do
and
I.
the 6.
Okay. Go and look in course content for Blackboard and see if you have any manufacturing company Excel worksheets. So can someone do that?
It's not there, Professor Boyd.
Said that mine is fast.
I was already in Blackboard, that's why.
So there are no working papers in there. You looked inside of
There are some worksheets in here, but it's not what's mentioned.
there's some financial works. Well, I'll check. If not, I'll try to find them and put them in. But there were, I thought there was a set of worksheets, one for financial accounting, which would be in the first thing in the accounting review. Then when we got the manufacturing accounting, I thought we had some Excel sheets in there. So for job order costs, you don't see any Excel worksheets.
Oh, there are.
It's an Excel. Yeah, it's an Excel thing in there.
Oh, there is. Okay.
Thank you.
I didn't see it before.
That's what I was just copying and pasting off of there.
Joanna, I was working on that in July and August for y'all.
I had to go and like copy and like type everything myself.
I just copied and paste from your worksheet into my worksheet.
Cheryl said it wasn't there.
I didn't see it, Professor.
Oh, you didn't do the multiple choice.
The what?
But yeah, the multiple choice wasn't in there. We just had to put like the letters.
Okay. So let's see now if we can work on this problem. So.
Hello.
So, can we go over stage 2?
Can we what now, Brady?
Can you go to stage 2, please?
Well, what about doing stage 1 first?
Oh, okay, that too. That too.
So let's do stage 1, then we're going to go to stage 2. In stage 1, we have 3 interests. We form a corporation investing $50,000. So every time we got an activity, we need a journal entry. What's this journal entry going to be? Who's responsible for stage 1? What team? Make me look up everything.
Common stock and cash.
Oh, so that's Shanika? Did I get it right?
Shakana.
Oh, okay. So the first one, Shakana. Okay, so we're going to debit cash and credit common stock when we form the corporation. What we're going to do with this next entry?
Oh, I don't know. That's not my problem. I went to group 2. We had stage 2. I was just
Okay,
wondering.
well, I'll come back to y'all for stage 2 then. Nobody here for this?
Don't you do
All right.
for that one?
Oh,
You
you
do.
Equipment and notes payable.
We're just going to debit equipment and credit notes payable. Now we come to our first manufacturing entry. Purchase 110,000 ink cartridges at 10. What we're going to do here?
well, so you gotta calculate and see how much you spent on all of the ink cartridges, right?
Yeah, how much is it? Add a zero to it. Add a zero to it.
101,000.
$1,100,000. What you gonna debit and what you gonna credit?
You gonna
Debit raw materials.
debit the cartridges, the equipment.
We're
Payable.
gonna debit raw materials, ink, and credit account payable.
Yeah.
So whatever raw material it is, we're gonna debit it, and there'll be a separate T account for each raw material and credit accounts payable. So those are the stage 1 entries. So if you had 5 raw materials, you'd have 5 of these entries. Okay. Any question? Okay. Did I tell you I have a team quiz on Tuesday? Did I tell y'all that?
Nah, you ain't.
It's gonna be about.
I thought you said you were working with a team, not a quiz.
Yeah, I said a team. And these teams work so well and talk all the time. Okay. When stage 3 and 3 things are happening, we're transferring in ink cartridges. Note that we only need 100,000 ink cartridges. We bought more because if there's a problem with the raw materials, we don't want production to stop because we don't have extra cartridges. So we always buy more. We're only transferring in 100,000 ink cartridges. The laborers were supposed to work 150,000 hours, but they actually worked 152,000 because people were absent, like Terrell, they didn't show up for work like they were supposed to. And so we incurred more labor hours. And then we applied the manufacturing overhead at that predetermined rate. So this is where we utilize the POR. Whatever number we come up with, we have to apply it to these same labor hours. So we got 3 journal entries to make. In the first one, we transferred the ink cartridges in. What's the entry going to be?
So you're gonna.
We're in stage 2.
Debit work in process.
First thing we're going to do is we're going to debit work in processing. credit raw materials for 100,000 ink cartridges at $10 each. We said we paid $10 for them. So when we bring the 100,000 in times 10, that's $1 million. So we buy them in stage 1, we transfer them to production in stage 2. The actual direct labor hours were 152,000. What's our next journal entry going to be?
You're gonna debit work in process. You credit cash or direct labor for 1,520,000.
Credit what?
1,500,000. Oh, you're gonna credit the cash, which would be direct labor.
All right, folks. This your problem? This your team?
Yes.
All right. You let other people get y'all points. So we debit work in process and credit cash because you got to pay the workers.
Mm-hmm.
Now, what's the third one then, Ghost and team?
We debit work in process, and we're gonna credit the manufacturing overhead, so it'll be 608,000.
How much?
608,000.
So the predetermined overhead rate that we came up with was how much?
Our PRR was 4.
4. So we're gonna multiply 4 times 152,000, whatever the labor hours were, and that should be 608. Any questions? So those are the next 3 journal entries and the 3 journal entries for stage 2. If you have more than one raw material, you have more than one raw material journal entry to transfer in what we're going to utilize. Any question on stage 2? Let's move on to stage 3, finished goods. And in this stage, we complete 40,000 books. We complete 40,000 books. Now, how many books were we supposed to complete?
50,000.
So how many did we complete?
30,000. 40,000. We're supposed to do 50,000 and we only made 40,000. What?
This
Or was
thing
it
get back up here. It's a mind of its own. Okay, I think I'm close to it now. Okay, and what I was trying to do was to see if we had some, those are journal entries, see if we had some T accounts in here. Okay. And okay, when we make journal entries, we always have to post them. So we're making the journal entries there, but when we made this journal entry to buy the raw materials, ink, we would put that in a T account for raw materials. Okay, so we put this debit in here. Because we're just working with the manufacturing process, we're only posting one side, and we got basically 6 T accounts we're working with now, just for this process. Raw materials, work in process, finished goods, sales, costs, and manufacturing overhead. So those are all the T accounts we're working with. So when we bought the raw materials, we debited for $1.1 million. Then when we transferred it to work in process, we credited raw materials for $1 million, and we put $1 million here. This is the labor, this is the overhead. So as you make those journal entries, you have to post them. And so you can see at this point, only 100,000 is left in raw materials. So Joanna, here's our T account. For the work in process T account, these are the three entries that were made. So we have 3,128,000 in there at this point. Any questions? Okay. So our next information, it says we want to record the transfer of 40,000 units to finished goods with raw materials transfer for 40,000 books only and 100% of the labor and manufacturing overhead transfer. And now we got to determine our actual cost. We've been estimating that cost before, but now we need an actual cost. So when we went in this chart, we said the cost was 68. Now we're going to be looking at, okay, what the actual cost is. So let's go back down to our T account. We're supposed to make 50,000. We only made 40. Does everyone see that?
Yes.
So what we're going to do is, because the paper is still in process, we will leave 20% of that there. But 80% of the paper, I got it in red, we're going to transfer it out. We use the paper, we finished 40,000 books, we transfer it out. Now, for the labor and the overhead, we're going to transfer all of it out. We can't leave it because the workers have been paid. They didn't do what they're supposed to, but you got to pay somebody else to finish those books. But they cost, on the 40,000 books, $815.20, and then the 608. So all of that has to come out. So our total cost is $2,928. And that's going to leave 200,000 in here, and we have 2,928 here. So what team has stage 3?
Team 6.
Tell me about that. Tell me about this team 6.
Huh?
So what's your journal entry, team 6?
We're gonna debit finished goods for $2,928,000, and we're gonna credit work in process $2,928,000.
Then y'all got to determine my actual unit cost. Does everyone see what we did? We transferred out a portion of the raw materials because they will stay behind. The paper will still be there. But the workers didn't leave any of their paychecks, okay? They just took, they didn't work, but they kept their money.
Unemployment.
And the 608 overhead goes with it. So we just add these numbers up. Then red, the journal entry is going to be 2,928, but I'm just demonstrating how you get the number. So this is 2,928 now. So how much, since I did most of the work, are these books costing now? We said they're supposed to be 68. So what's going to be the unit cost of these books?
$40,000 times 68.
All I want you to do, 40,000 to what now? Who's team 3?
No, team 6. Well, yeah.
I mean,
Okay.
who has finished goods?
I think. Hold on. Let me look at our list. That may be us.
Yeah, what team has
Yeah,
finished
we
goods?
did.
All right, well, tell me, y'all have that one?
Yeah.
So what's the unit cost? You said the unit cost is supposed to be 68. What is the actual unit cost for the ones that are completed? Can anybody determine a unit cost? Am I going to have to determine this unit cost? So what was the unit cost supposed to be?
68.
Yeah.
And the actual unit cost is probably more like $73.20. Why is that?
Because you divided the 2,928 by 40,000.
Okay. Okay.
How did you
So
get there?
say it again, Kiara.
You divided what we debited by the 40,000.
Okay, thank you.
So management was supposed to have this cost of 68, but it's not because we didn't complete enough books, but the people still got paid. So now the books are in here at $73.20. That's the cost. Okay, let's see where we're at now. We sell 30, so we're on stage 4 now. We sell 30,000 books. Who has stage 4? And let's see if we can make these journal entries. Can we? Yes. What was our selling price? What did we say we're gonna sell them for? 204. So unless you're selling gas, you know, where you can change the price, once you publish prices, that's it. We're going to have to debit cash, credit sales. So we sold 30,000 books at $204. How much we getting? Anybody calculate that?
You said 30,000 by $204
Times.
times
6,120,000.
So we just simply multiply the 30,000 books sold, that's how many we sold, times that selling price that we determined, 204. So we created that selling price. So gotta, you know, that's why we have a 3-month one. We don't get everything produced, so we don't get everything sold. We need some slack in there. What's the next journal entry we need to make? Anybody had inventory accounting before?
Would it be cost of goods sold and finished goods inventory?
Correct. So we need a COGS and a finished goods. So we're gonna take the 30,000 that was sold, and we're gonna multiply it by that new cost we had, which you said was what, 73 what?
73.2, I believe.
320. So how much is that going to be?
$2,196,000.
$2,196,000.
$1,196,000.
$2 million.
Yep, 2.
So when we get to this transaction, we simply multiply everything by 30,000 that's sold.
Professor Boyd, it was 2 million instead of 1.
Pardon?
It was 2,196,000 instead of 1 million.
All right, so it's 2,196,000. And it does sound more like it.
Hey, I'm glad we got them extra points for correcting you, Professor Boyd.
I'm glad too. Our selling price is 204, correct?
Yeah.
Okay. So I just showed you how to get those numbers. Okay. Now I've got to work on this overhead. And in the T account for overhead now is that credit of 608 that we put in. Remember when we debited work in process of 608? So we have to credit the overhead for 608. Now the actual costs come in. And the actual cost is depreciation 160, other overhead 450. So our total overhead is what? That's six. Is that going to be 610? Yeah, I think it's a 610 if you add those two together. So we're now going to debit manufacturing overhead. For 610,000. And we're going to credit accumulate depreciation for 160,000. And we're going to credit cash for the other 450,000. So that's how we handle that. Now we got to post this. So we go to the overhead account and we put in 610. So what has to happen now? We estimated overhead to be 608. It actually turned out to be 610. So we under applied the overhead. We under applied the overhead. By how much?
2,000.
2,000. So we have to come up here and make a journal entry debiting what?
Common stock. Common.
Debit the COGS and credit manufacturing overhead. For $2,000. So we go back to our T accounts. We're gonna do our posting. When we credit this for $2,000, this account is now zeroed out. So that always has to happen, that once that entry is made, this account is zeroed out. And then we're gonna debit cost of goods sold, so we need to put 2,000 here. We also need to post our sales it's 6,120,000, right? It's 6,120,000, correct?
Yes.
So we're gonna go to sales and put 6 million. And we're also going to post that cost of goods sold amount, which was 2,196,000. So every time you make a journal entry, you got to post it. So the 2,196,000 would also be in the account. And so cost of goods sold is actually going to be what, 2,198,000, because we just did, we have to estimate the cost early on. Once we found out what it actually is, if it gone the other way, then it'll be on the credit side and we would have subtracted. Okay, we're almost finished now. Selling expenses, 20% of sales, administrative expenses, $1 million, dividends total 50,000. So who has stage 6? Sales were what, 6,120,000. So we're gonna debit selling expenses.
It's still part of stage 4.
Stage 5 now. So the selling expenses, what's 20% of 6,120,000?
$1,224,000.
1,224,000.
Yes.
Then pick up our administrative expenses. Simply debit administrative expense. And we credit cash. What was that, 2 million? Yeah, 1 million. And can we make the one to pay the dividends? Carol was talking about dividends earlier.
Yeah, the dividends are 50,000.
What's the journal entry?
50,000 debit and 50,000 credit.
What accounts? We done.
And you tried to make fun of me about them dividends earlier.
Well, what's the main part of the problem?
Points
So
added,
now
sir.
we're ready to prepare, Joanna, our financial statements.
Why do you keep saying my name?
I don't know. Well, because you cost of goods manufactured, cost of goods sold, and the income statement. So the cost of goods sold tells us how much is manufactured. So we're going to go to raw materials where we had 1 million we bought. We got 100 left. So 1,100,000 was utilized, this number here. So we're going to do it. We had zero beginning. We're going to put in the raw material purchase 100, raw materials ending 100,000. So the
Professor,
raw use is 1 million.
I have a question.
Mm-hmm.
Do you have to make for the selling expenses and administrative expenses and dividends?
Uh-huh.
Okay.
I wouldn't worry about a T account right now. I just didn't. Don't worry about it.
Okay.
You know, but we would, but just to get through this. The overhead 1,520,000. We simply look in this T account for the labor and overhead and bring those down. So the total manufacturing cost is 3,128,000. Same thing in the account. 200,000 was left over. So the cost of goods manufactured is 2,928,000. This is just from repeat stuff. And what you'll notice is that the 2,928,000 is the same amount that we transferred to finished goods. So the cost of the goods manufactured is going to be, so the answer is already there, that credit that went up here to finished good. So we always know what the answer is. Okay? Let's see if we can do a cost of goods sold statement. And we begin that account with zero in it, right? So we'll come up here and get our cost of goods manufactured number. Paste it in here. Okay. Less the finished goods ending inventory. How much do we have left in finished goods? So we said we transferred out what, 2 million? 196. So how much does that leave in this account?
$784.
784?
Yes.
Okay. I'll take your word for it. So 784 is what's left in the account. So as we're doing,
Wait, Professor Boyd, what did we just we just subtracted the other two to get that.
So what now?
We subtracted what was in the account to get 784.
Mm-hmm. Well,
Can you
let's
ask me
go back.
those numbers again?
Is it 732 or
I have
7?
something different. I got 732.
Yeah, I got 732.
All right. It says 732. So you just simply take the difference. You had a debit, credit, the difference is 732. So we'll
Okay.
correct that to be 732. Okay. So the unadjusted cost of goods sold is going to be what? We're going to subtract this number from that number. Cost of goods manufactured, total less the finished goods inventory. How much we're going to have right here?
The number that we just
Just subtract 732.
A million five
100.
How much?
1566.
2928 minus 732. How much is that? It's 2 million something, right?
Yeah.
I said 2 million what?
2,196,000.
Okay, so 96. And our under applied was what?
2,000.
So since it's under applied, we added. So our adjusted cost of goods sold was how much? 2 million.
2,198,000.
Okay. So we go back up here to the T accounts. All of this information is in the T accounts. So you can got those postings right. You can go on and do these statements. So, and I know our income statement team is ready. So how much are our sales?
$6,120,000.
How much? 6,120,000. So we're gonna put the 6 million. Less cost of goods sold. So all I'm gonna do is get this number, copy it. Too much. So what's our gross margin gonna be if we subtract 6,120,000 from the 2,198,000? How much do we have left?
2,922,000. Wait. Yeah, 3,922,000.
3,922,000. So let's see if we made any money. How much were the selling expenses? We calculated in that journal entry.
1,224,000.
1 million what?
224, I believe. Yeah.
Okay, 1,224,000. 1,224,000. What was the administrative expense?
1 million.
So our total operating expenses are what? 2 million.
2,224,000.
So what's our net income at the end of the day? This is one.
Um,
1 million what?
698.
I'm take your word for it. 698.
Okay, but I said it a little shaky.
1,698,000.
Here, how you got the net income?
I subtracted both of those. That's right, Professor Boyd?
Yeah, you always
The
subtract
margin minus the expenses.
Yeah, you subtract the
So
cost,
the 3,922,000
subtract these
minus
expenses.
2,224,000.
You get 1,698,000 net income. So is that right?
Yeah.
Now you see the role of the selling price multiple. If that multiple, the multiple has to be high enough so you can have a profit when you don't make them all, when you don't sell them all. And you got to cover these selling and administrative expenses. So that's why the multiples are 2 and 3 and things like that, so that you can end up with a net income at the end of the day. Are there any questions? So that's what this chapter is about. And this is what you've got to be able to do. So let's see. Are there any questions?
That wasn't no walk in the park.
That wasn't what?
That was no walk in the park.
It wasn't.
Yeah, it's kind of hard to follow everything while we're doing it like this.
It's hard to follow everything, huh? Okay.
Can you do one more example?
Can we what?
Do another example?
That's what you all gonna do.
Yeah.
Okay, so
Oh, shit.
write these teams down. Team 1, you got exercise 10-7, 10-7.
And this is due.
On Tuesday. Team 2, you got 10-8. Team 3, you got 10-9. Then we'll start back over. So
Wait, what about the rest of the teams?
I'm coming back to them. So we'll just start back over. So team 4, you got 10-7 also. Team 5, you got 10-8. And team 6, you got 10-9. At all teams, do I have a 17? Is it 6 teams? So
And what
there's
if I is that again?
what?
What if I is that on Blackboard?
They're in the primer on page, the new primer, page 310 to 330.
Is it in the old primer?
No, the new one. Every team's supposed to have a new one.
Is this for anybody in this?
And you work with these. You just kind of, okay, we've gone through it. To watch me work another one is not where we need to be at. So what we need is for you all to work these.
You said team 5 got 10-8, right? 10-8.
Mm-hmm.
Okay.
So you need to work these. Then after you've worked them, then we'll pick some to go over. Then your team should be ready. We'll see. Either quiz next week or quiz the week after that on this. And then the midterm. Any questions? And you got a sample worked out problem. So you just have to go through and look at it. Let's look at these. Which of the following manufacturers is most likely not to use job order accounting system?
The ROC.
Would be C, the oil refinery, because it's kind of hard to get those costs for oil. Some of it's in the Gulf and some others other places. In a job order cost accounting system, which accounts will be debited in recording a purchase invoice for raw material?
A.
A, raw materials inventory. In a job order costing system, which account will be debited in recording a transfer of raw materials to manufacturing process? So recording the transfer of raw materials to the manufacturing process.
Is it D?
Should be D.
Yeah, so I thought.
That's a calculation there. Here's a calculation. We'll probably start on 7 next time just to get you into calculating for the calculation cost of goods. So we'll start on 7. Look at some of the others and we look at how you're coming on working it out. So, everything is kind of logically laid out there in terms of the process. It's just going through the process is new and different. We're layering on top of financial accounting, and this is why we did that review, because it's the same thing: journalizing interest, manufacturing interest, post them to the ledger, and now you have T accounts that have all the information you need to make a journal entry.
Professor Boyd.
Yes, sir.
is it possible for you to upload, because I'm going to try to get the primer, but no one in my group has a new primer. I'm going to try to go on Canvas and get it if the bookstore is open. But until then, is it possible for you to upload these problems, a screenshot of these problems into Blackboard, the ones that you're asking us to be due on Tuesday?
It's always possible.